Let's speak about Cathie Wood and what she has to say about the overall stock market, baby. What is happening, investors? It is your boy Jack. I am not a financial advisor, and this is my third video of the day. This has to be our first triple upload in many months. I'm feeling it, my friends. You ever wake up and you just be feeling it? Maybe it's because Virgin Galactic's up 25% pre-market. I don't know what it is, but I feel like making videos, baby. And what I want to speak about in today's video is Cathie Wood, ARK Invest, the future of growth stocks, long-term investing, all of those juicy kinds of things. I remember when Cathie Wood really started getting, popular online, especially with people maybe in their 20s to 30s or growth stock investors in general. She was getting extraordinarily popular because her ETFs were absolutely destroying the broader market. She shared a lot of the same beliefs that us growth investors do. She had relatively young analysts who were looking at different markets than, the big wigs. And then the growth crash happened. ARK funds are obviously doing terribly. Let's say what it is. And a lot of people have kind of lost faith. I, for one, have an awful lot of respect for Cathie Wood, the team, regardless of how the funds are doing right now. I believe in what they do. I've learned an awful lot from her. I really love keeping up to date with her. And I want to just show you guys some bombshells that she's been dropping lately. So we're going to be taking a look at some clips of Cathie Wood. We're going to be having a look into the ARK ETFs, what they've been doing, some things they've been buying, some things they've been selling, deflation and inflation, quite a few different things. But it should give you a decent idea of what's going on inside the mind of Cathie Wood and what she thinks about the broader stock market as of this moment in time. And for you long-term investors who've been feeling some despair as of late, hopefully this will fill you with a little bit more confidence, and if not, just a better perspective of the overall stock market, if nothing else. So right before we do get into our video, my friends, before we get to our first clip of today, ARK Invest Cathie Wood, I love this setup. Rotation is good news. Can I please ask you to hit that juicy like button? Drop me a comment down below. Let me know, do you own any ARK ETFs or do you follow ARK or Cathie Wood? If you are indeed new around here, my friend, please consider hitting that juicy red subscribe button and joining the family of investors for the triple upload day. If you're interested in joining my private Discord as well, that's the first link in the description. In there you get access to all of my buy and sell alerts. We speak about things like this. We speak about loads of different stocks. It's a juicy community. And if you like 2 free stocks on Webull, that's the second link in the description. Gotta sign up, deposit $100. Easy money. So we're going to start it off with a short clip from when Cathie Wood appeared on CNBC. And they're speaking about, if you look at the date, it's May 7th. The crash was in full effect right here.
Let's touch, if we may, on this sort of current pullback. Do you actually welcome that as a long-term buying opportunity for a lot of the stocks you love? Or are you feeling the heat a little bit?
Oh, I love this setup. The last time I was on, I think I said that this rotation was good news.
Before we let this go on a little bit further, just look at her. Look at the body language. She loves the setup. On the screen, it shows ARK Innovations. The ARK's 1 week performance at the time was down nearly 9%. And she's happy, okay? She says she loves the setup and she's going to explain why.
Because it meant the bull market was broadening out. It was strengthening. And the worst thing that could have happened to us is to have the market narrowly focus on just our ilk of stock, the innovation space.
I know that's one thing that everybody needs to keep in mind, okay? A lot of us investors, we get very focused on one particular niche or one particular sector or one subsector such as growth or value or dividends, whatever it is, okay? And for a very considerable period of time, innovation was doing extraordinarily well. Whether it was growth or some of the FANGs, some of the more established companies, they were all doing very well for a very considerable period of time. Then biotech was doing particularly well, especially anything with a sub $200 million market cap. It was like you couldn't not make money in the short term. We've seen the rotation. The rotation's still in full effect. Growth is starting to make a bit of a comeback if you take a look at your portfolio over the last week or so. Not to the extent that it was, obviously, but you're seeing the rotation kind of come back around to an extent.
Instead, it has broadened out so that year to date, I think it's energy's up 40%, financials are up 27%. And from the peak in mid-February, our strategies are down. The ones that have been hit the hardest, not all of them, are down 30 to 35%. I love that setup.
Before we let her go on, this is ARK. This is Cathie Wood, okay? They have an incredible team, incredible analysts. They do so much research. They were down 30 to 35%, okay? You are one person. If your portfolio is down that same amount, you're doing no worse than the entire team over at ARK, okay? So don't beat yourself up if the last while has been rough. And again, look at the optimism, look at the excitement. She understands that in the long time, we're going to make more money because things have gone down in value so quickly.
We're at, from our point of view, 5-year time horizon, nothing has changed except the price, and therefore the return, which at the peak of the market and of our strategy in mid-February, we expected a compound annual rate of return of 15% on average per year from our strategies. Now that the prices are down, that number is somewhere in the 25 to 30% range.
That's where I'm going to leave that clip, okay? Now, I remember when they came out and said they were expecting compound growth of 15%, people thought, what? Why? Because that was when it was up 100% on the year or something like that. And everybody was like, I thought these were going to keep going up at these absolute insane valuations. Thought it was going to, you know, not 2x the S&P, but absolutely destroy it to pieces, okay? And people were disappointed with the thoughts of an ETF returning 15% year over year because of how well the market was going at that current time. That was the guidelines they had set out for themselves. Now that yearly return after this pullback has gone from 15% to 25 to 30%. You can't tell me you'd rather a 15% return every year for the next 5 years as opposed to a 25 to 30%. That would be absolutely ridiculous. I think sometimes you just need to take that step back and remember that investing is a long game, okay? We're not here for the short term. We're not trying to make a quick buck. I know some of us are, and I've done it. Most of you guys have probably done it, but the large majority of us here are investors, and that's what we're doing for a long period of time to try and accumulate wealth. So that's just one thing to remember, okay? While all of this is happening, she looks more excited than she looked for the entire of last year. I'll keep up to date with her on a weekly basis. With that being said, if you want to keep up to date with Archivist Cathie Wood, if you want to have a general idea of what's happening in the world of finance and the stock market, why does this sound like an ad? It's not an ad. In the know with Cathie Wood, watch these, okay? I'm obviously not going to do it now. It's half an hour long. So much value packed in there. If you're somebody who struggles to keep up to date with everything that's going on, watch this. Trust me. Now, there is just one more clip I want to play for you guys quickly. This one's only about a minute long, okay? Cathie Wood says, Apple is great, but ARK is about new tech. And this really does show like how ARK is actively managed. A lot of people may have been confused when they saw ARK invest selling Apple. I mean, what's wrong with Apple? They're the biggest company in the world. They're making people lots of money. I'm invested in Apple and lots of people are. But hear why they were invested in Apple, okay? Why they will invest again and why they sold. Hear it out.
You're talking about Apple.
So Apple was one of our cash-like instruments. It's an innovative company.
Before I let it go on, just that phrase, cash-like instruments. Remember, a lot of us investing in SPACs when they were very close to $10 a share because there was minimal short-term downside. And there was also the potential to make an awful lot of money. Cathie Wood treats Apple and a lot of the other FANGs in a very similar sense, okay? They're generally not going to be as volatile as the broader market, especially when it comes to downwards movements happening, but they have considerable upside.
It's in the innovation zone, but its characteristics are very defensive. So we will add names like Apple, the FANGs, Apple, Google, Facebook. We will add those, add to those positions, or even reintroduce those stocks. As a bull market, our portfolios were up 150%. We knew there was going to be a correction, and we just wanted to have very liquid stocks. Apple is a great company. It's going to do fine. It's a FANG. It's in a lot of portfolios. We are all about the next FANGs, but we will use the existing FANGs. If you see, they are acting very defensively. Become a defensive group. So we will fold them in, increase them when we see a move like we saw last year. When we see a decline, like the one we're seeing now, we're seeing much higher returns.
So that is why they sold Apple. I mean, that's the reason they held it in the first place. It was not necessarily a defensive investment, but it was almost a place to park cash. And there's absolutely nothing wrong with that. And now it's actually a good sign that we see them selling Apple, because that's money that's going to flow back into these growth stocks that a lot of people are afraid to buy right now. Because you look at them, they're down 35, 40, 50, 60%. ARK is taking what was essentially their cash pile, okay, and moving it into these what appear to be higher risk beaten down stocks so that they can make 25 to 30% a year for the next 5 years, as opposed to 15% a year only a few months ago. I mean, it's a true blessing in disguise. That's why you see things like this. Cathie Wood's ARK Invest snapped up more Coinbase shares on the dip. She's pretty famous now for saying that she sees Bitcoin potentially hitting $500,000 a coin. She bought more Teladoc and more Palantir. Teladoc's down over 50% from the highs, and Cathie was buying here. She was constantly buying this company. She's buying more Palantir. I mean, you all probably know this. Palantir's similar story, nearly 50% in the red from the highs. She was buying it back here, 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 she's buying it again. One thing I'd like to point out is this. Now, this is back from about 10 days ago. Cathie Wood. The big risk is deflation, not inflation. This is a really interesting take. While the current situation is reminiscent of the run-up in prices from 2006 to 2008, okay, the bond market is signaling that may not be the case at all. I think we all know treasury yields went up quite sharply, but they have to an extent regulated, okay? It's different than 2006 through 2008. So good deflation. Treasury yields are not moving higher because the bond market is now seeing 3 sources of deflation, according to Cathie Wood. Bond market investors see what Wood called good deflation, coming from innovation that spurs an economic boom. Advances in DNA sequencing, okay, we know they're ARC-G. That can lead to lower healthcare costs, okay, impacting prices in 20% of the economy, potentially bringing deflation to the healthcare sector where costs have risen steadily over time. For every cumulative doubling in the number of whole human genome sequences, healthcare costs decline 40%. Advances in battery pack capabilities are another example of good deflation. For every cumulative doubling of capacity in battery packs for electric vehicles, costs drop 28%. I was just speaking about ABML earlier on today. Then there's bad deflation. I don't think we need to get too into this, but you have to look deeper into these things is the key point I'm trying to get out of Cathie Wood in today's video. It's not me coming up with this stuff, it's Cathie. And there are a lot of people again who do agree. Particularly the people who work with Cathie, the younger analysts out there, the younger investors, and I mean, they've been making an awful lot of money. When you look at what they're doing and the kind of things they're buying, you're going to notice a lot of growth in there, a lot of tech, a lot of obviously genome-related companies. We've been seeing that for a very long time. There are some odd sells here and there. There are some ones that are difficult to explain, but only they know what's going on. At the end of the day, the consistency in adding to the positions that they would have been adding to 6 months ago is impeccable. The large majority of the weights stand true to what they were not too long ago at all. They clearly have confidence in all of their favorite companies. And if there's any point that you take away from that video, it should be that. And you should hopefully be able to translate that into your own portfolio, my friends. That really is what I want to happen here. If you were willing to buy a company at $30 a share and that company has dropped to $20 a share, I mean, why are you not willing to buy more, assuming that you want to get some more money into the market? If fundamentals haven't changed and the stock price is not moving in accordance with how the actual company is, if valuations are better now than they were when you bought at 30, why wouldn't you want to buy more now? Now, obviously, it's not always good to buy a stock that's fallen in price, okay? You don't want to be silly with it, but you kind of get the picture I'm trying to make. But anyway, my friends, that is it for today's video. Hopefully, there was some thought-provoking things going on in today's video from Cathie Wood, and maybe some of my commentary as well. If you watched all the way till the end, you, my friend, are a true legend, and I really do appreciate you being here from the bottom of my heart. If you did enjoy the video, perhaps took some value or insight, could I please ask you to hit that juicy like button, drop me a comment down below, and please subscribe if you're new around here, my friend. And again, if you're interested in joining that private Discord group, that is the first link in the description. It's a very juicy community. And if you like those free stocks, that's the second link. Anyway, guys, I hope you all have a beautiful, blessed day. I'll see you for another video very soon. Peace.